All right, in this video, I'm going to be looking and analyzing the top 3 Darwins in DarwineX based on performance fees. So we're going to be looking at the user Finbu, which has the Darwin THA, who's made 826,470 euro performance fees. Sir Sanestemas is number 2, Darwin S50, 486,000, and High Five HFD, 220,000. So what I'm going to be doing is I'm going to be having a look at these Darwins, having a look at their returns, their drawdowns, anything else we can see. Maybe we can learn something from these guys by looking at their statistics, and we can see what's realistic and what's not realistic when it comes to these financial markets. I believe most of these guys have quite a comprehensive track record. So let's start off with number 3, which is High Five. First thing first, return since inception is 45%. So this track record has been since 2017, and they have made 45% return. Now, to most people, that doesn't sound amazing, incredible. You're expecting 10,000%, 300%, but this person is number 3 for a reason. 45% over 7 and a bit years. So that just gives us an idea of what happens in the market. If we just look at their returns, right? They started 2017 with September being an 11.85% month. Now, if you look at that 11.85 compared to the 45, that's a huge portion. So in 1 month, this particular trader in 2017 would have already made 33% of their return that they would make in 7 years. That just shows, just because you have a really incredible month, that doesn't mean you're going to be making 11% every month. As you can see, in October, they only made 2%. Well, not only, but just in comparison. Then they made 3%, and then they ended the year with a total return of 19.8%, which is a good return. I think most people would be happy with an 8% return. Most investors, not your YouTuber, Twitter trolls that think that 10% a month is realistic. Crazy people. Then we look 2018. If there's anything crazy here, most of the time it's quite a small return. And then you can see in September, they made a negative 5% return, which I want us to note something, right? If this trader looked at September and said, okay, September's my best month because in 2017, I made 11%. And then they went and they put more power into September following year. Like, let's say they doubled their risk or tripled their risk because, yeah, bro, in 2017, I made so much. Let's say they tripled their risk. This wouldn't be -5, it would be -3. The next year, okay, they made a return. They made a positive. But then the following year and the next year after that was a lot. And then after that, it was 0, 0, 0. Maybe this particular trader had a look at their results and just decided maybe it's best not to trade in September. And then you see they made 28% in 2018, they made 39% in 2019. But then 2020, which is that year, everybody knows what year I'm talking about, was a lot, -23%. Now this is a trader who has a comprehensive track record. They had a losing year. So just because you're having a losing year, if you've got the data to back it up and you've been profitable, don't change things. Maybe this trader didn't change things. I don't know. Or it could be the year. I'm going to assume this trader didn't change their strategy, stuck to it. But this is just one of those years that they had drawdown. Following year, still a loss, -1.84. Year after that, -9.98. And then 2023, they made 0. It seems that they stopped trading, or maybe not stop trading, but they stopped trading this account, because from March of 2022, 0, 0, 0, 0, 0, 0. Maybe they stopped trading, I'm not sure what. And they're still not trading. I don't think they're just hitting break even, but it's just trading. And then we also can look at his drawdown, -35%. I'm not even going to look at more of this trader particularly because I don't think they've been trading for the last 2 and a bit years. So we move on to the next one. Just to put into perspective, this trader, from what it looks like, hasn't traded in 2 and a bit years, yet they're still number 3 in the Hall of Fame performance fee. That's how crazy of a performance they had before that. Now, let's look at number 2. When did they start their track record? 2016. They've had a total return of 197%. Drawdown since inception, -13%. Doing quite well there. Darwin IA allocation, they have Darwin IA allocation as well. They have 633 investors and they have $6.87 million under management. Those are real people that have put their hard-earned money and backed this trader. 162nd position in DarwineX Gold. What does this tell us? Well, this trader is obviously a GOAT, right? But doesn't mean that every month they're going to be number one, always have the best returns. And if you're always striving to beat the leaderboard and always this, that's not necessarily a good thing to be aspiring to, because yeah, it's cool. And I'm sure it must be really cool. I've never had it, but at the end of the day, it's all about slow and steady wins the race. 2016, they made 0.5%. So imagine this trader in December, they saw this 0.51% and they just gave up and straight. Yeah, not much, not making much. But then look, 2017 absolutely killed it. They had one losing month in August and they made 41%. Following year, 21. Then they made 2019. For this particular trader, 2020 was quite good to them. Obviously, they had 3 losing months, 24%, 12% the next year, 9%, 5% the following year, and they're now at 4% for the year. But as I said, this is number 2. So they're not having the greatest of years, yet overall their track record still one of the best out there. And what I want to note is, look at how many months this trader had losing months. Look at 2023, 1, 2, 3, 4, 5. 5 losing months. That's nearly half of the year they had losing months, yet they still ended up in the green at the end of the year. This is why it's always important to keep going. Imagine this trader gave up after January, February. I'm not trading the rest of the year. Why? Look what happened in March. 6% fixed January and February. Then April was testing them, -1%. May broke even from there. June lost again. July, August. Look at it. Look at 2024. 1, 2, 3, 4. 4 months the year. 1, 2, 3, 4 months the year. 5 months the year. Green. 4 months the year. Red. But look at their track record. They've been trading since 2016 on this account. They have 6 million. What I want us to remember and note is 197%. What is that a year? 1, 2, 3, 4, 5, 6, 7. So let's say 8 years. If we divide that, that's about 20-something% average a year. That's what this trader makes, 20-something% average a year. And when we make that, we think we're failing. But this guy is second place in the Hall of Fame. Let's see. Let's have a look at the assets and time frames. Are they a scalper? Are they a swing trader? Let's see. We've got 5,618 paid. Trade frequency 2.77 per day. So this trader trades 2.77 times a day. So they are most probably, well, I guess they could be anything. Could be a day trader. Let's see. Average winning trade 132. Average losing trade -70. So they're most probably verging around an average duration of a trade of 1 day. So this looks like they're a little bit of a day trader into swing trader. So more so like a swing trader, but swing trader that is trading a lot. 2.77 a day. We don't know exactly. Maybe they are splitting their positions and it's actually one trade, but it's split into 2. But that's key to note. This person could be a swing trader because the average duration of their trades is a little bit more than a day. This just shows how dynamic you can be. You can be a swing trader who takes lots of trades. You can be a scalper that takes very few trades. You can mix and match and do whatever you want. This trader is obviously not like most traders. They're in the Hall of Fame. Why don't we take advice and learn from these statistics? What works, what doesn't? A lot of the stuff that gets taught on YouTube by people that don't actually have any proof. Where's their DarwineX track record? Where is their proof? They just flex their Lamborghinis. They could have rented those. How do you know? We want to see real stats. Where is this Sir Son SYO? Let's have him give us a course. Point being, you can trade however you want. Do not listen to other people. What if people said to this person, you can't be a swing trader and you can't trade so much and hold these positions for so long? Look at the average winning trade, 100. And the fact that the losing trade, 70 pips. They're not like those crazy 1 pip stop loss guys or whatever that you see all over the internet. This person has obviously ignored what is going on in social media, and they are doing what they do best. And 6.87 million, that is crazy. That is crazy. If they make 10%, they make the investor 687,000. They take 15% of that 687,000. Now we move on to the king, THA. Return since inception, 808%. Now the last guy was 197. What is it, like 5 times more return. Max drawdown minus 14%. Return last 6 months, 4.74. Assets under management, 25 million. Absolutely insane. Current position, 30th. He's only position 30, not number 1 all the time. Yet look at the asset, 25 million. Let's have a look at the return. A little bit longer of a track record. The other one was 2016. This one's 2015. Let's have a look. 2015 was an absolute banger of a year, 75%. 2016, 26%. Following year, 51, 8, 21, 9, 11, 43, 13. This trader has been in the green for the last, since 2015, nearly 10 years in the green every year. That's why this trader has so many investors. Key to note, let's have a look. Sharp ratio of 2.08. Now in my previous video, we spoke about sharp ratio. And a sharp ratio greater than 1 is good. Greater than 2, even better. This trader has shown over the test of time that they know what they're doing. I mean, look at it. I mean, even though this trader is a really good trader, let's look at 2021. 1, 2, 3, 4 months of the year in the red. What does this tell us? Well, this tells us you can be in the red. That's how this game works. You can be in the red, but at the end of the day, in the long run, you can end up still in the green. Do not give up. Look at this. 6%. March 2021. This trader lost 6%. April 7.3. Ate up all the losses from March, plus some profit. This trader went from 51% return in 2017, dropped down to 8. Did they give up? No. That's a 43% drop from the previous year to 8. No, they didn't give up. They kept going. That 8 went to 21. Then that 21 went back to 9. Then improved the following year, 11. Then from 11 to 43. Then 43 to 13. This is important. This is how this game works. You're not always going to have the same return. Imagine in 2015, this trader thought, oh, I'm always going to make 75%. No, that's not how it works. I mean, 26%, that's what, nearly a third of that return. What would this trader have thought? It doesn't look like it phased them because they doubled the return the following year, basically. That's why it's key to see that just because you have a bad year or your return isn't that great in 1 year. In 1 year, it could be 8. In another year, it's 75. That's how it works. Don't give up. Don't look at your results and think it's not working. Obviously, if you're looking at your results, you just red, and you've never seen green in your life except at the traffic light, then obviously things need to change. But if you've got a few red, but in the long run, it still works, your risk to reward is right, your risk management is correct, and in the long run, you're still ending up in the green, then maybe you don't need to change anything. That's why I wanted to show and I wanted to analyze for myself, but also for the viewer here. So we can see, look, average position in Darwin IA Gold is 71. So don't obsess with the leaderboard. Just obsess with continuous improvement. If you're on the leaderboard, cool, well done. Don't let it get to your head. But his track record is insane. Now let's look at the assets and time frame. They have taken 16,235 trades over this period. 97% being Forex CFD. Number of assets, 38. They trade a lot of assets. So yeah, looking at this, I've just moved to another one just to see the trade frequency. 6.64 trades a day. Average winning trade, 32 pips. Average losing trade, -6 pips. Average duration, 2 hours. This trade is probably with a very small stop loss, 6 pips. Very different to that other trader. This is probably a scalper. 2 hours, 50-minute trade. 6.64 trades per day. And if I remember correctly, I was listening to a podcast with this particular trader in it. He was talking about a strategy, and that it's a news-related strategy. So it has to do with trading the news, and he's got a whole bunch of analysts. So it's not just him anymore. He's got a couple of analysts, and it's a proper hedge fund. I think he's even got a hedge fund. Don't know if DarwineX helped, because DarwineX do have that hedge fund as a service. But yeah, he's got a hedge fund as well that he trades with, and he probably has more investors there as well. Let's talk about that 25 million. Let's use that 10% example in a quarter. If he makes 10% in a quarter, he makes the investors 2.5 million, depending on which figure we're looking at, 25 million, 28 million. But let's say it's the 25 million. He's made the investors 2.5 million over a quarter. If he makes 10%, he gets 15% of 2.5 million, which is about 300 and something K. I'm not going to do the quick math there, but that is absolutely insane over a quarter, just from trading. And I mean, he could be trading a really small account. He could be trading 1,000 euros here on this account, and he could be pulling in these numbers, because obviously the trade copy is connected to the other investor accounts or whatever, however it works. Point being, if you stick to trading in the long run with DarwineX and keep your track record growing, you don't even have to be on DarwineX. Just keep a good track record. This could be you. This could be you with 100 million, 200 million, who knows? But the key is long-term thinking. If there's one thing I want you to take from this video, think in the long term. Don't look at your results over the last 1 month, 2 months, and they weren't great. Look at it in the long run. Are you making money? Are you doing good? If so, is there a need to change your strategy? Think about that today, and I'll see you in the next video.